Welcome to the Move Me podcast with Kevin Methvin. Today we have the fabulous Claudia Mauri-Rodgers, who's been doing mortgage lending since she was, 18 years old?
Since I was 18.
Wow.
Right out of high school.
That's just incredible. So
Yes.
Tell me a little bit about that journey.
So it's funny because when I was about 12 years old, my dad was in car sales, so he has similar personality to me. And I always said I wanted to get into real estate. And at the time, I actually said commercial real estate at 12 years old.
Wow.
And when I was 18 years old, I was working at Max's Diner in San Ramon.
Okay.
And I used to have a husband and wife team, older couple that used to come in all the time, and they were brokers. And they came up to me one time and they said, "Would you be interested in getting into real estate?" And I said, "Absolutely. I've talked about it a lot." And they introduced me to my friend Catalina that worked on the lending side. So she worked for Beneficial Finance. She was a manager.
Oh, wow. Okay. I remember that.
And so they needed a Spanish speaking loan officer. And so I went in and interviewed, got the job right away, commuted from Discovery Bay to Fremont every day at 18 years old. Yes.
Wow.
Old Vasco, not new Vasco, old Vasco. That one
What
was
an adventure.
crazy. Yes.
Yeah, I can only imagine.
One lane all the way through, and it was like bumpy all the way around. So I remember some of those commutes were at least 3 hours long on some days, but I learned a lot. 17.9 interest rates at the time.
Wow.
Or 24.99,
Wow.
5 points, 5-year prepays. Like that was a thing at Beneficial.
Yeah, people are complaining about today's rates. You should have seen how they were back then.
I know, it's crazy.
Yeah.
But I mean, once I learned the business, I got on to the broker side, and I felt like, oh my gosh, once rates got below 10%, I was like, wow. Like,
yeah, you helped all kinds of people left and right.
Yes.
Yeah.
So got onto the broker side, and then eventually opened my own shop. My dad and I both, Mauri Financial Services, back in 2002. So we ran our own company, had loan officers, and
then this whole time you've been doing loans, and now you're back to the financial services. Can you tell us more about your new venture?
Yes. So about 2 years ago, I had talked to someone that was in the financial services side. So he was somebody that got insured for life insurance and annuities, and was talking to me about what they did and what they had to offer. And I was intrigued by it more than anything because I felt like, okay, well, if I'm helping somebody with their mortgage, that is one of the biggest assets that they will ever have. And so how do we protect that? So for me, my initial thought process was, well, I want to make sure that I could offer them some type of insurance policy in case something were to happen to the breadwinner or the breadwinners that purchase this house, that house would be safe and their kids or their spouse would be able to keep it if something happened to one of them, which unfortunately I've had, it's happened.
That can be devastating.
I've had 2 clients pass away and their families are left behind with that responsibility. And so I said, well, that's, it's just an add-on to what I already do. And since then, it's just taken off, and it's just been the biggest blessing. I'm so grateful that fell onto my lap, because it just goes so well with the mortgage industry.
And how does it protect the mortgage in those cases where the people, that passed away? Yeah,
so we do offer life insurance policies, term policies, index universal life policies. We do have mortgage protection policies. It just depends on the person, what makes most sense for them. But we make sure we cover enough to cover at least the mortgage, or if it doesn't, if they can't afford the full amount, so you owe $800,000, at least cover $400,000. That way your spouse or whoever's left behind could refinance it to a lower loan amount and be able to afford the payment. Yeah. So life insurance can be very inexpensive, just depending on your health, your age. There's definitely, kind of like in mortgages, we kind of have to do a little underwriting.
Yeah. So, everybody's situation is different.
Exactly. But it can be. I mean, my husband at 50 years old, he's healthy, but his $250,000 policy was $68 a month.
Oh, wow.
So, I mean, obviously we got a smaller policy just on that term. We have something else, but it can be very inexpensive.
I mean, $68, some people spend that on Starbucks every month, right?
Absolutely. So yeah, so it's good to be able to offer that with what I already do. Yeah,
and then you mentioned that you want to get your broker's license. We're talking about your testing. And,
yes.
And what's that next venture look like? Because you're going to be moving to Idaho someday?
So being in financial services, I call myself the money girl, because basically anything to do with money, I want to be able to help you with. Okay. And so I want to get my broker's license, not because I want to get onto the real estate side. I feel like I already have enough going on with my side. But just having it because I've already done all my schoolwork for it. It's been, I don't know how many hours of schooling for it, just to have it. And hopefully once we get to Idaho, because my husband and I are moving there, hopefully I will be able to flip properties with my husband.
Oh, wow. Okay.
That's the plan. That's the idea.
And for those that are trying to acquire their first biggest asset, their home, you have a bevy of different products.
Yes.
What are some of the favorite ones that you like working with right now?
So on the lending side?
Yeah, on the lending side.
So on the lending side, I definitely, I do work for a broker. So we work with over 250 lenders. It is, obviously, we don't use all 250 lenders for everything. We have our top favorites. But of course, on my end, I do a lot of conventional and FHA financing. That's your standard typical loans. But we do offer a lot of non-QM. So I-10 loans, bank statement loans. We have no income, no asset loans. We do offer everything. Obviously, as soon as you go to non-QM, you're looking at larger down payments and larger interest rates. Or higher interest rates.
Yeah.
So, but it is something that we're able to offer. And if it can be done, we could do it.
So can you explain to the audience what non-QM means? Talk to me as if I'm 10 years old, because I know you and I understand this because we're in the business.
Yes,
maybe break it down a little bit.
Non-qualified mortgages. Non-qualified mortgages are not backed by Fannie and Freddie. And so what that means is the big banks, the government entities that back these mortgages. So these are more outside of the box loans. They're loans that you're not going to be able to get at your bank. You're a
major institution.
Yes. They're a little stricter. They're outside of the box. You're self-employed and maybe you don't show as much income. We have to go with other options. We have 1099 loans. So if you get 1099, you're self-employed and this companies give you a 1099. We could base your income off of that 1099. On a standard conventional or FHA loan, we cannot. We have to use your tax returns, but by the time you write everything off, and then
the ITIN, so that's for people that don't have a social security number, is that correct?
Yes, okay. ITIN loan is for people without a social. They have an ITIN loan, which is how they file their taxes. A lot of times with them, they could be self-employed. I have a client that owns a big company and I just did a loan for him on a $1.5 million house. He owns a big company, but he has an ITIN. And he was able to purchase that house by putting 20% down and using his bank statements as income. So, it's just loans that are outside the box.
Gotcha. Okay. And then sometimes you'll have to go in and save a loan for another loan officer that didn't know what they were doing. You were mentioning it earlier. Can you tell me a little more about that?
Yes. So it is common. I've had clients come to me on the last minute because, of course, they don't find out that they can't get the loan till the last minute. And they'll say, oh my gosh, this is what, or actually, usually it's the realtor that calls me.
Yeah.
And hey, I have this loan. Can you do this for me? And we just have to go in and try to find a way to do it. I obviously want to know why it didn't get done because I want to make sure that it's something that I could, work my way around.
Right.
But that's something that we do quite a bit. I think not only is it because I work with so many lenders, it's because I've had the experience and I know that what can and can't be done. And sometimes I'm too truthful. I've had clients that don't like the fact that I told them, you know what, I'm sorry, but it can't be done right now, but this is how you could make it happen. And a lot of people don't want to hear that, even though I'm not telling you no, but I'm telling you the truth that this is where you are right now. And this is what we need to do to get you there.
They want the touchdown. They don't want the game plan, right?
Yes. And the game plan is important. I've had clients I've worked with for 5+ years to get them to the point of buying a house. And sometimes it could be a marathon or sometimes it could be,
boom, we're ready to go, just like that.
Exactly. So it just depends on the person and how willing they are to do what it takes to make it happen.
Yeah, and with so many different products available and your experience, you're still a very young lady to be doing this since you're 18. You still have a lot of experience, and that really does come into play, right? Because everyone's situation is definitely different.
Absolutely. And I think I work different than other people. I'm very I like to keep the stresses of loans to myself. I like to make sure that everybody has a good experience with the loan. I don't like to stress my client out, even if I run into a problem, because I just saw some kind of meme about loan officers putting out fires, that people don't even know exist. And that's us. There's a lot of times where we're on the back end trying to fix things that people don't even know about. They just think their loan got done and it was easy. when the reality was I didn't sleep at night for 2 weeks. But
yeah,
we got it
yeah.
done.
Part of the reason why I don't do that anymore.
So on the financial services side, this, I got into this business about 2 years ago. So not only do we offer life insurance products, we also offer wealth management products, retirement planning products, options for people. Like, I will sit them down, and just like I do for a mortgage loan application where I take their full application, on this financial services side, I have to sit down with you and take a full analysis of your income, your debt, your assets, everything. That way we could figure out where you're sitting right now for retirement and where you need to be able to comfortably retire. So you could be in a position where you can retire very well, because we'll look and see what you're going to receive in Social Security. We're going to look at what you may be receiving in pension, your 401k. So we'll put a picture of what that looks like and say, okay, between everything that you have, you're going to be getting $5,000 a month. Okay, but if we do this, and that with it, we could stretch that and make it $6,000 or $6,500 a month by doing this. So we have options of, where to move your money, what to do with your 401ks. If you're sitting on an old 401k, we want to get that moved out of there, because we want to put it somewhere where you don't have the chance of losing money when the market dips. So
yeah, you had mentioned something that was different than the 401k.
Yes.
So what is that exactly?
So the products that we offer, first of all, you cannot lose when the market dips. So there's a zero cap. So you will not lose any of your money if the market, even if it goes dead for 10 years.
Never even heard of that.
So your money will stay your money.
Wow.
So that's number one. Number two, 401ks usually pay you out at retirement at 4 to 4.5%. So if you have $1 million, you're going to see about $40,000 a year, and they take taxes out of that.
Ouch.
So some of the products we offer will pay you out at 7 to 7.5%, and it's lifetime annuity. That means that if you live to be 110, even if your money ran out, we're still paying you. So that's
incredible.
Yeah, there's a lot of really good options. We have IULs, Index Universal Life Policies. I put my 22-year-old daughter on it. She pays $200 a month. Every month, she just puts $200 into it. And by the time she's 65, she'll have about $70,000 in net retirement income, because she started it at such a young age. And it's something that you could start at an older age. You just obviously have to invest more money to make sense of having a larger retirement.
Yeah.
And there's actually ways to help you guys with taxes. So if you're self-employed, we have options to minimize your tax debt. So it's just
that's a big issue with the self-employed people. It's all about what you show the IRS typically, right?
Absolutely. So, and you could invest in yourself instead of paying Uncle Sam. So would you rather, put $15,000 in your own pocket, or hand that over?
I'd rather pay myself.
Exactly. So we have options for that. And you actually have until February to put money into those types of accounts.
Oh, wow.
To use them as write-offs. So, it doesn't have to be done before December 31st.
See, that's a big misconception. I bet a lot of people don't know that.
Nope. So we'll be able to help with that. So
there's so much
You're money girl.
Yeah.
That's me.
So everybody contact the money girl. Thank you so much for coming over.
You.
It's good to see
Thank you.
And we'll see you next time.